So Kevin, you've been in the industry for a long time. You've helped a lot of people get into new homes, refinance, etc. What are you seeing in the market right now?
Right now, we are seeing interest rates are higher. They've been higher for a period of time. People are getting used to that a little bit. I do still get the occasional client who says, I'm going to wait until interest rates come back down. Do you know what's going to happen when interest rates come down, Matt?
I do not.
We're going to have an abundance of people getting into the market. The market is already super tight. There's more buyers than there are sellers. When rates drop, all that's going to do is create a bigger feeding frenzy of more people looking for housing. In addition to that, there's a shortage of housing in West Michigan. There's going to continue to be a shortage of housing in West Michigan for an extended period of time. Do you know why?
No.
20% of our clients every single month, very unofficial study, but we're the second biggest lender in Kent County, and we do a lot in this whole area. Been tracking our clients. 20% of our clients every single month are moving here from other areas. So an abundance of people moving and choosing to live in West Michigan. We have some big builders here in town. We do not have the giant builders that build these big tract homes that you see outside of Texas or these big major metropolitan areas. There's going to continue to be a shortage of housing for a long period of time. The other thing with house prices and interest rates and everything else, we are still below, significantly below the median house price in West Michigan. I personally think that West Michigan is an awesome spot to live. For sure, we're above the median places to live in the country. I think we're in the top 5 to 10%, but I'm a little biased.
Beaches don't hurt.
Yes, the beaches, the natural resources, the change of seasons, the airport and travel, the culture. I mean, just all these things are here. People are realizing that they're moving here, and they're moving here faster than we can keep up with the building. The fact that the median house price is here, and I think we were somewhere in the mid 300 range, the national average is in the mid 4. So we're significantly below the median house price. We're going to continue to see house prices move up.
Well, and even with all the craziness you hear in the media over the last year, home prices still were up 7% since last year in West Michigan and in most areas of the country.
Yeah.
So when you're getting calls right now, what are their concerns about the market?
It's a bubble. Prices are coming down. I feel very confident if you're buying a typical home, a mid to upper to in that range, those prices are going to hold solid and probably continue. House prices are kind of like politics. It's local. And local house prices, if it bleeds, it leads. I do not need to hear anything more about the price of a condo in Seattle or prices of homes in San Diego. It's irrelevant to a West Michigan market. And I think people see that, and it leads in the media. House prices are down in this county or that state. It just doesn't apply to West Michigan for the things we said earlier.
So obviously people hear a lot about interest rate. I think it's the easiest thing for the media to put stories about. If interest rate isn't the biggest part of a mortgage, what should people be asking about?
So if we believe, as my premise when I'm talking about, we're going to see continued appreciation of houses. Let's say a house, let's go super conservative, Matt, and say West Michigan for a median house price somewhere in that range, we're going to see 5% of appreciation next 3 years. The interest rate is really irrelevant if you think on a $300,000 house, you're able to get $15,000, and $15,000 of equity over the next 3 years. So $45,000 of equity. Does it really matter that you paid a couple $100 more per month? So $2,400 a year times 3 would be $7,500 more in interest in that period of time. But you're able to buy a house now. If you believe that house prices will continue to appreciate in value, you can always refinance down the road. So for most people that are looking to get in, now's the best time to buy.
So talk to us about cash flow in that perspective, because obviously housing prices, interest rates, there's a lot of factors at play, but if you purchase a house, what it really comes down to is how it affects your family and your personal financial situation. Yeah. What are you seeing right now in terms of cash flow?
So cash flow, rents are going to continue to go up. So let's talk about someone that's renting versus buying. So the cash flow piece is you're applying money towards an appreciating asset, which should appreciate in most markets on an annual basis. So you're going to continue to see appreciation there. You're not throwing your money down the drain and paying someone else's rent. Think about rent. Let's just use round numbers. Let's say you're paying $2,500 a month. That's $30,000 a year in rent. Let's take that same 3-year example, $30,000, $30,000, $30,000. paid $90,000 in rent, and you didn't get anything for that. Compared to buying a home to get that appreciation, you're not paying the debt down a bunch in the early years in a mortgage, but you are paying something. It is going towards something. So cash flow is big, but where are you applying that cash? Are you just paying rent, or are you paying for a house and something you're going to own?
Yeah, and I mean, if you're renting a house, the interest rate is technically 100%.
Yeah,
so
it's a 100% fee. Renting is a 100% fee.
Kevin, you mentioned that interest rates are in fact higher than they were a couple of years ago. They were historically low for 10 straight years. What is your strategy when you're looking at a customer's financial situation?
That is a fantastic question. My strategy is I want to get a client into a 30-year fixed rate vanilla mortgage, one that principal and interest is going to stay the same. The other piece is a lot of my competitors, and I see this a lot on national levels with these .com lenders, they want to advertise this super low interest rate. What they don't share is all the fees and additional costs that are associated with that interest rate. Oftentimes, it'll take you 5 years of being in that mortgage to be able to capitalize on that lower interest rate. You had to put the money up front. With my clients, I want to keep the cost as low as possible, get a decent rate on a 30-year fixed rate mortgage, and be ready to jump if, likely when, interest rates drop. 6 months, 12 months, 18 months, 24 months, whenever that is. I do not want to advise my client to pay thousands and thousands and thousands of extra fees to get a rate that's just slightly lower. I want to get in, keep the costs low, wait for that opportunity, jump on that, refinance to a lower rate, allow that client to capture that equity in the interim.
So I'm kind of hearing that there's a lot of planning involved in this.
Yeah.
So how long in advance should someone contact you or their local mortgage professional if they're thinking about getting into it? Because it sounds like planning might save them some time and give them some options.
The earlier the better.
Okay.
I talk to clients all the time. Hey, I'm thinking about buying in next fall. I'm thinking about buying in the spring. I'm thinking about this. The earlier the better to get a plan together. Also, it's funny how when you put that in your mind and get your brain going, your reticular activator, you start talking about a house, it might happen that suddenly you find something you want to jump. You want to know that you're ready. So the sooner the better to talk to a professional. It gives you really, really good advice in looking out for your best interest.
So I think a lot of times first-time home buyers are oftentimes scared to make that first call because it can feel very real. But let's talk about second-time home buyers for a moment. Yeah. So there's a lot of people who purchased homes in the last 10 years. Prices were low, rates were low. It was a crazy time to buy. What are you seeing from move up buyers right now in terms of opportunities?
So I'll use you as an example. Let's say you wanted to go buy a new house. What's your biggest concern right now? You have a home and you want to look at buying a new home. What's your biggest concern? Do you think there's any issue with you selling your current home?
No, sell in a second.
Okay, so your biggest concern is being able to find something, correct?
Absolutely.
We have a bridge loan program where we will reach in and we'll tap into that equity in a second lien position. Let's say you have a $50,000 or $100,000 of equity in your house. We'll get a mortgage. We'll set up it's called a bridge loan. We'll take a second lien position on that and use it as a down payment for your next house. So you can shop confidently knowing that you're going to be able to buy the new house. You find the new house, you get under contract, and then you put your house up for sale. You close on your existing mortgage and you pay the bridge loan off at the same time that happens. We're using that a lot. It's a very, very helpful tool for clients who are fearful about moving, that they're not going to be able to find a new house. They know they're going to sell their house, that they're worried about finding a new house.
That's awesome. The confidence, I think, is really what most people want. And it sounds like if they call you or a local professional, they can get a clear financial picture of where they are, but where they could be.
I'm in the problem-solving business, not the mortgage business. So when we talk about clients reaching out, we're going to give straight advice. We're going to help them make the best decision over a long period of time. A lot of conversations end in, hey, let's sit tight for it right now, or let's wait, or you're in the best program right now, or whatever it is. I'm going to help clients make the right decision. That's 20 years of doing this. I'm going to take care of people in West Michigan, and Grand Rapids is the biggest small town in America. You have to take great care of people because it's a very small town.
So tell me more about how your team specifically operates that way. You can go on the internet, click button, get mortgage or something like that, but it sounds like your team is putting in more of a human approach. What type of extra insight are you guys able to find for clients that might be helpful?
Well, I'll tell you right now, listing agents that are selling a house for someone oftentimes are looking at 20, 30, 40, 50. I heard 70 offers on a home recently. That listing agent is going to have a choice in which offer they want to accept. And a big part of that offer is that listing agent who's selling a house for a client wants to make sure the money is going to be there at close so their client can move on with whatever they're doing, buying another house, moving out of state, whatever it is, they have to know what's going to happen. So that listing agent sees a great pre-approval letter from a trusted local lender. Those pre-approval letters move to the top of the stack. They just do. It's a matter of fact. 72 offers. A qualified listing agent is not going to take an out-of-state, out-of-area, unknown lender with as much as there is in the line. They want to work with someone who's trusted and is known in the community.
So with all the competition that you're seeing right now, what are a couple other things that buyers can do to really ensure that they're writing the best offer and that they're having the best possible opportunity of success?
Well, I'll tell you one. The first thing is, a lot of people don't realize this, is that having a professional real estate agent represent you costs you nothing. Most people don't realize that. To hire a real estate agent to work for you, that real estate agent is going to get paid a percentage of the sale of the listing. Not by you, not out of your pocket. A lot of people don't realize that. So to have someone that's a trusted advisor represent you, it's crazy not to have that. So I think hiring a local professional, finding someone, talking to someone that's going to fit your needs, I think is really critical.
So to clarify, it doesn't necessarily cost a buyer more money to hire a agent with more experience and more accepted offers under their belt.
You want to find an agent that fits your personality, that is looking out for your best interests, someone that you're connected with. There's lots of great agents out there. So absolutely, you need to have someone representing you. I think that's probably one of the biggest things.
So we've talked a lot about purchases.
Yeah.
The other side of the mortgage industry is refinancing.
Yeah.
And you don't hear a lot about refinancing when rates are up. What are you seeing in the market right now? Are people still refinancing?
That's a great question. The answer is not as much. And I like that. I think that when clients are locked into a 3% interest rate mortgage, high 2s, low 4s, I mean, what a great spot to be locked in that mortgage. And that's great. It's not a one size fits all for everyone. And here's the exception to that. I just read recently that credit card debt is the highest it's ever been in the United States right now. Credit cards at 24% interest rate. If a client is in a home and they have equity and they've been in that home and they're locked into a lower interest rate, that's great. That's where they should be. If they have an exorbitant amount of debt in that 20% range and it's eating them alive and they have all this equity in their home, there is a position to talk to a trusted advisor like us. We have these conversations all the time. Oftentimes they end, let's find another option and not get out of that great low interest rate you have. But in some cases, when you're just getting by, you're drowning in credit card debt, you have all this equity in your home, in some cases it makes sense. Let's look at your cash flow. Let's look at those 3 credit cards. Let's look at that home equity line of credit, which keeps going up. Let's look at this other consumer debt you have, and you have $100,000 equity in your house, and you have this $50,000 of revolving debt that's eating you alive, and you're just trying to make ends meet. It doesn't make sense. So what we do is a cash flow analysis. Yes, your mortgage payment is going to go up. Yes, you're going to be getting out of that super low interest rate, but we're able to make that debt go away. One of the things I advise with clients is, I'm going to help you with this, and I don't feel great about it. Here's the deal. I want you to commit that we're going to rip up that credit card debt. We're not going to get ourselves in that spot again. We're going to cut up all those credit cards. You're going to keep one credit card for you, one for your spouse. Every single month at the end, you're paying these things in full. And let's get you out of debt. Let's start building up the savings. In the same token I talked about earlier with refinancing, when you buy a home, you can still refinance later. If you refinance now to a cash out refinance to pay some debt off, it doesn't mean you're stuck with that interest rate forever.
So you can do it. So you can refinance more than once.
You can refinance, pay off that debt. Let's wait again, 6 months, 12 months, 18 months, 24 months, whenever it is, if and likely when interest rates drop, you could refinance that mortgage that you took to cash out right now to get yourself in a much better cash flow position. We do that with clients all the time. But I'm going to give straight advice. I've been doing this long enough. I'm not looking for one more sale. I'm not looking for ripping a commission check. I want to take great care of clients, give them good advice, and it's to them. It's what fits for them. It's not a one size fits all. So for some people, yes, it does make sense to look at refinancing.
A lot of great advice. For someone that wants to get started or learn more, what does it cost and how do they begin the process?
So We're super selective in who represents our company at Treadstone. We have fantastic loan officers. They know the business inside and out. They're going to give good, solid advice. There's not a single loan officer that works for our company that I wouldn't have work with my best friend. It really is good advice. The first thing to do, send an email, get online. I'd like to talk to a loan officer. If you know one of the great loan officers, reach out to them. They're going to give you really great advice. There is no cost to have a conversation. If that's, I'm thinking about buying a new house, but I'm worried about my down payment if I have all this equity. Maybe that's a bridge loan program. Maybe they're in a spot that I'm drowning in credit card debt. There's been some changes in our household and I need to tap in a little bit of that equity, but I'm just concerned about, can you walk me through that? Pick up the phone and call, send an email. We'd love to give you great advice. It costs nothing to explore. We're not the cheesy, pushy sales reps that you see so many times. We're going to give you good, solid advice.
Awesome. Thanks for your time today, Kevin.
Thanks a lot, man.